And we are live. Hello and welcome to Fermenting Opinions. I'm your host, David Pyden, and this is Fermenting Opinions, the podcast in search of a more palatable political ferment. We're recording August 29th, 2019, and we're here to talk about the economy. And please don't run away right away. We promise to keep this short and topical. What we're here to discuss with our fermenters, Drew, Hailey, and RJ, is are we looking at a recession in 2020, possibly sooner, possibly later? What are the possible indicators for that, and whose fault is it, if anybody's? And what can we do about it? So, first of all, Hailey is sort of our resident expert on all things economics. So, first of all, Hailey, thank you for joining us with this one in particular and kind of running
You're
honcho.
welcome.
Cool. So, tell us, first things first, like what defines a recession?
Well, a recession is just really coordinated. It's just it's a time. It's in a time whenever there's like a synchronized decline in economic activity, and I believe it has to be over the course of 2 quarters, so 6 months. Is that right? I think RJ knows that off the top of his head.
I believe it is 2 quarters.
So, a recession is 2 consecutive quarters of what we call negative economic growth, which is the way that we talk about economics. We can't just say it's negative growth. So, yes.
And so to that first question that you posed, Dave, I don't think that it's possible to have one this year.
Gotcha.
Because we don't have 6 months left. And
gotcha.
But we are in a present downturn. And so whether or not we're going to actually enter into a recession, which really you don't know about it, like you don't know if you're going to actually have 2 consecutive quarters of declining growth until after the fact. So we're never going to really know that. We can know right now that we're in a present downturn, but in general, whenever we've looked to the past, whenever we've had recessions or depressions, they tend to follow similar cycles and have similar factors that happen during them, which we now know are part of the cause for the Great Slowdown. And one of them is decreased manufacturing, the inverted yield curve, and other decreased investments. And then where do you want to go from there?
Yeah, I mean, you kind of hit the top points there. Let me see here. Can we talk about, before we get into that sort of the cyclical nature of it, is that something that's legitimate? Is that something to be tweaked where it doesn't necessarily happen? Because most of what I've sort of read and watched suggests that, like, not only are we due for a recession, that we might actually be overdue. Can you speak to that at all?
Well, I think that that's a very big overgeneralization. Every single downturn or recession is going to be different because we all live at different times with different economic capacities and, just a different economic world, a different world for investors. So to say that they're all going to definitely, like, that we're due for it, yes, the economy is cyclical, it ebbs and flows, but like there's I don't like the whole and we're due for a recession, just because I don't think that that's a fair way to sort of describe it.
Okay.
Yeah.
And I agree with that. I think that Misesian economic theory suggests that there is an up and down sort of curve to the economy. Keynesian economic theory would reject that and say that there's no reason for it to go up or down other than what you're doing right now.
Mm-hmm.
So the question is, what are we doing right now, and why is the economy where it is? We also just got today a slight revision in the quarter 2 GDP, which was down 0.1. So our GDP growth in quarter 2 for 2019 was 2.0 rather than 2.1. That's not a huge difference, but it is. It's not a great sign considering what we're talking about tonight.
Mm-hmm.
Sure. Let me see here. So I guess
Ask the stupid questions.
yeah. Okay, I'm gonna ask the dumb questions. Yeah, all right. Explain it to me like I'm five. That's what we're trying to do here. Um, I guess here's something that it's just sort of coming to me that the Fed cut their interest rates a little bit. Was that really going to fix anything? Was it supposed to?
I mean, their main thing is to keep jobs and to keep inflation down. And so, what they're trying to do is to bolster investment by making credit a little cheaper. Just because whenever money is more expensive to get, you have companies taking out less loans and spending less money because it's more expensive. But whenever you have like these massive disruptions and volatilities in the supply chains for due to these trade wars, and there's other factors, but me personally, I think a lot of this does hinge on trade wars and the interactions with China and just creating a volatile market for investors that just it's not attractive to invest in a volatile market.
Yeah, I think Haley's absolutely right. I think one of the best ways to look at the Fed rate is that it's a tool. It's a tool to help guide the economy. Mm-hmm. And when we're in a situation where we're still growing, I mean, even quarter 2 of 2019 was still 2% GDP growth. That's been historically accurate since the recovery from the Great Recession. It's questionable as to why the Fed would use part of its tool, which is only at 2% now, in order to continue growth. Normally, what the Fed wants to do is to step in when there are leading indicators of serious economic slowdown, or even more efficiently, after an actual economic slowdown, to reduce the rate that it costs to borrow money in order to induce
people going back. Yeah,
exactly, to induce more people
just for inflation too.
Yeah. Oh yeah, and adjust for inflation to get more money into the market now.
So
when we're using the Fed rate simply to, I guess, increase growth in a minor way over a short period of time, it's not really what it's designed for. And it also takes away a tool later which can actually be used to confront a true economic slowdown. So I think that's why after the Fed cut its rate about 3 weeks ago, the markets actually went down. I think that people saw that as a leading indicator, as, oh, well, maybe the market is poised for a recession. And again, it removes a tool from what the Fed can do in response to a true downturn.
Gotcha.
I think that the timing that they probably did it, though, is, one of the biggest things that, the Fed rate is designed to sort of infuse by lowering is increased building and manufacturing activities. And they reduced them first in, I think it was June. Is that the first time? It was, and then they might again in September. And so that's which is a weird time to do it, because June is during a high building month, at least for houses and everything, because you can't build as much in the winter. So I get, so in a way, like, why did the Fed do it then whenever there was just like some very small flashing signs, and now it's sort of, it has less of a tool than it would have previously had, being hit with more factors and signals. But I do think that perhaps the timing may have been sort of in line with building seasons and, like, tracking job cycles for whenever there's a boost in certain kinds of jobs.
Well, yeah, and also it's a direct response to what Trump has been asking for.
Yeah, but I don't really know. I mean, I can't say whether or not that had any role in Powell and the board's decision. I do know that it was. I mean, we know it wasn't unanimous. They actually fought over it. So
right.
Yeah, and I understand Trump had been giving Powell like a lot of crap since then, because like it either wasn't enough or he wanted him to do it again, or I don't remember all the details, but like he's really been berating Powell on Twitter and whatever else that
Yeah. And that's one
Well,
of
I
the
mean,
reasons why it looked like a direct response to Trump.
Gotcha.
Because if you were going to have a concerted effort to avert an eventual slowdown, then you would probably just put out a Fed reduced rate. But they said at the time they reduced the rate that this was not meant to be a long-term cut, that they were not anticipating further cuts. And because of that, it looks like something that they were trying to do to placate Trump, to say, we'll cut the rate once in a while, we'll do something for you, but we're not really in a position to say, like, yeah, let's cut a whole point off of the Fed.
I don't know. I think the Fed is in a rock and a hard place because no, it's not doing it because it's responding to Trump or whatever. But if you really want to, make sure your economy as a country isn't going to continue to is going to be further insulated from declines. It's not that you're going to pester the Fed to lower interest rates. You're not going to continue engaging in this month-long, no sign of ending in sight, consistently increasing in its retaliatory tit-for-tat nature trade war with the largest, you wouldn't do that. And so the Fed is, sure, Trump's also harassing them, but whenever you do have that, externality of what Trump's doing with the trade war, and then that of course there are long-standing agreements, and we're a global world, and that's a lot of our international agreements, these international supply chains and everything is very vulnerable to these trade wars, and so that's going to make investors anxious.
Right.
Which is going to be something that that is what the Fed is going to be starting to respond to.
Can you explain, again, the explain it to me like I'm five thing, the investors are anxious. Translate that into what, because I kind of already know what you mean, but I just kind of want it out there. Like, what does that mean to have anxious investors, and why would that impact the economy?
I mean, if you have a deal for like the next 5 years, you're going to get X amount of raw materials, and you have this contract, and you're building these supplies and agreements, and you want other people to invest, and you have to, you're going to have to pay your bills every month to get these products made, part of which is from this certain raw material, and then you're going to have to increase your payment to account for tariffs. And that's cutting into your profits. There's going to be less, if you're a public company, less people are buying your stock because you're not having as much profit. In general, you're not going to, I'm trying to think about this on a less global scale, but basically, if a bunch of businesses just suddenly aren't making more money, you're less inclined to invest your money in businesses, right? Because they're less attractive. They're not making as much money. And they're not whenever it costs more money for their goods and it costs more money for them to do business.
Right. No, I agree with you. And I think that what you're saying bounces right off of the Trump tax cut.
Yeah.
Which is just another example.
That's a good segue. Go ahead.
It's just another example of Republican voodoo economics. This idea that somehow if you make the rich have more ability to move in the economic sphere, making their their profits greater, that it's going to trickle down to everyone else. It's just not the case. The effect...
Well, tax cuts for the rich are the trickle down one. The concept of tax cuts in general is just that if you have more money, if you're not spending as much money on taxes, you have more disposable income, and maybe you'll invest it.
Right. And the problem is that when we aim that at the rich, which is exactly what the Trump tax cut did, that we find what we've always found. These people hoard the money, they buy back stock, and it doesn't re-enter the economy. If that money was re-injected into the economy, which is more likely from a middle class tax cut, then more people are in theory profiting off of the tax cut itself, but they're putting that money back into the economy. They're buying things like mattresses and cars and food. When the rich are given a tax cut, they're not doing that. They already can buy all of those things.
It's actually interesting. I read something today. So, like, I think the top 10% of the wealth in America, I don't know if they do it by income or just like assets in general, but the top 10% of Americans who own 80% of the outstanding shares in public companies, and they're not buying anymore, and they're not. So there's been like a significant decrease in their spending activities in the past like 2 months. That I think the data set that they were analyzing. Yeah. So
right. Yeah, and what makes the economy run is people spending money at local stores. Like, that's at the end of the day, that's really what makes it run.
Yeah.
And when we're not giving people the money to go and do that, we're not actually benefiting the economy all that much. That's why the deficit, the budget deficit, is now supposed to be almost $1 trillion this year. I wouldn't be surprised if they end up increasing that to $1 trillion this year. Is going to be for the next decade $1 trillion. A lot of that is built in from Trump's tax cut.
Yeah.
When it was down below, Obama, for example, cut the deficit from over $1 trillion to less than $500 billion.
Yeah, I thought it was like 550 or something. Yeah.
It was like 439, I think it is last year.
Nice.
So, and part of the problem with that, to my understanding, is that when you have that big of a deficit, when you've given this tax cut that's not actually helping the economy, you don't have effectively the budget anymore to take corrective actions to sort of, like priming the pump kind of economic activities by the government, that they can't do those things because the money's all gone, because they essentially let all the rich people keep it to buy back their stocks. That's my understanding. That's the like I'm 5 sort of breakdown to, again, like I said, to my understanding.
Well, yeah, and if you were five and you had a bunch of money, that's exactly what you'd want to have happen.
Yeah, and that's pretty much where we're at.
But I think that this, to kind of segue a little bit, I think that this is like, there are a lot of, maybe not super red flags, but there's a lot of yellow flags signaling right now. And, this is a dangerous territory for Trump to be in for re-election.
That's why I was wondering to tie, if we're going to tie this back to, a little bit of partisan fuckery anyway, that was this, I just like that term. It's basically when I'm doing sort of a political trash take. That say like Trump and I guess Trump affiliated forces like pushing for the Fed reduction and things like that. Like, we're trying to stave off the recession until hopefully past the point of re-election next year. Because interestingly enough, I was listening to sort of different news shows and here's what they said, because I was watching Fox and Friends, right? And they were saying, they put out there, well, they, their economists think that, that it's not likely that's going to happen in, the first part of 2020, that if we do get a recession, it'll be after the election. So that is to say that won't affect Trump. And I'm wondering if that's, I don't know, orchestrated? Like that's at least what the hope is. Yeah, that. Okay, thank you.
I feel like that sounds tinfoil hat. I don't know though, but yeah, I mean, Trump did do a massive sugar high when the economy was already on a sugar high in 2000. Like, I think the tax cuts took effect in 2018.
In fifth grader language, we all now got the diabetes.
I gotta put in my carbs, okay, to see how much insulin I get out of this one. But Is that a reasonable strategy? Try to stave off political strategy to try to stave off the recession until.
I mean, if
Yeah.
you're really just only interested in just being around for 4 years plus get re-elected and not, yeah.
I mean,
But
that's.
yeah,
I mean, isn't that
I'm just
his
gonna
end
do
game?
something to hope that I'm just like kill it these first 4 years,
Yeah.
and then I don't have to care anymore.
Gotcha.
But I don't really know.
Yeah, I mean, but I think if there is a recession before the election, Trump probably can't win.
Yeah.
Like, there's probably not a feasible way that he can win enough electoral votes, even with the most pessimistic of projections, which say that Trump could win an electoral vote even if he loses the popular vote by 5%. So that's like the new normal.
That sounds about right. And I'm sorry to interject on you. You're kind of garbling out a little bit. But one thing that I had looked up before the show is, and I can't remember which one it was, but in all of U.S. history, there's only been one president that's won re-election while the country was in recession. So of all the times that's broken when a president's trying to win re-election.
Who was the one president?
That's what I said. I can't remember who it was, and I apologize for that. So you guys will have to go research that, or maybe call me a liar next time.
Well,
but
and I think just RJ mentioned the Electoral College. Some of the early factors that are signaling right now are decreased in residential building investment and decrease in manufacturing activities. This is hitting hard places like Ohio, Indiana, Pennsylvania, and probably Michigan. Those are key states for Trump to maintain the electoral vote in order to maintain his presidency. And those are all states that were hit especially hard during the Great Recession. And yeah, there are the early signs will hit the, American manufacturing heartland first and hardest.
But yeah, and let's not equivocate here. One of the problems with recession, which Hailey mentioned earlier, we never know when we're in recession until we're already in recession. So when we talk about things like leading indicators, it's really a question of looking back. It's hindsight is 2020. But there are some things that are happening now that have happened for prior recessions that look not great for the economy as it stands. A lot of people have talked about the inversion of the yield curve. It's not really that great of an indicator because the inversion of the yield curve has predicted the last 7 recessions within 6 to 22 months. So, is it going to happen before the next election? Is it going to happen 2 years into the next Trump presidency?
It's kind of a lousy correlation, actually, because there's
right.
an inversion of the yield curve. Oh, we lost Drew. Maybe he'll come back. So, and then at some future point after that, there will be a recession. If it's like you said, if it's 2.5 years or something afterwards, that's not a fantastic indicator, is it?
No,
I didn't
that's
know
where,
that, but go ahead.
That's where Missouri, for example, had voted for the eventual presidential winner for 12 presidents in a row until I think Obama 2. I think it was 2012 that they were wrong for the first time. And it's just one of those things where it's a coin flip, right?
Yeah.
If I ask you whether something's going to fall heads or tails, maybe we get it right. And maybe we get it right 6 times in a row. That doesn't necessarily mean much for your prognostication. It just means that you were right a few times in a row.
Yeah.
I don't know that the inversion of the yield curve is that important unless it happens over a long period of time.
That's what I was just about to say. The yield curve I think it's only been like 2 days where it's actually been inverted in the past like couple month or two, right?
Yeah, it's been limited, right?
Yeah, but you'd have to have it for several more weeks before it probably would fall into that like 6 month until a recession indicator category, because 6 to 22 months, that's a long time for it to actually. 22 months doesn't really tell me if it's anything uh, that enables you to, anything prophetic. But
Right. Yeah. Is it a leading indicator or is it just a thing that happens when we go into recession? Like,
mhm.
can we look back and say, oh, yes, we made less money? Well, of course you did. We were in
On
recession.
longer
Right.
term treasure, yeah. On longer
Exactly.
term, yeah.
Gotcha. So I guess the takeaway is don't be. It can be an indicator, but it's like
It's a
like
yellow flag. It's not a red one.
right. It's more like but I guess my understanding overall with recession is more like if you're in the desert and you're thirsty, it's already too late kind of thing. Like the thirst is the
Right.
indication that you're already boned. Um, but it's something my dad told me when I was a kid.
Well, I mean, if you just think about it, if you want to loan me like $100 and I have to pay you back in a week, you'd probably loan it to me for, virtually no interest. But if I had to pay it back to you in 5 years, you'd be like, I want $120
right.
because that's a long time to get paid back. And so, when longer term rates are lower than the shorter one, that means that people don't really feel good about your ability to pay something back further
Makes
down the
sense.
line. And so the longer that kind of mentality for people who are investing goes on, yeah, then it seems sort of natural, yeah, that it would probably always predict a recession, because if you have a prolonged amount of that sort of psychology with investors, yes, it's gonna just stop growing.
That makes good sense to
Yeah.
me.
And there's also there's a really important point here, which is that Trump has complained about the idea that the media is creating this recession.
Hey, RJ, we're kind of losing you, man.
Oh,
You've gone on
you
Max
have me
Headroom.
now?
You're a little bit better. Like your video's real like blocky. Like you look like one of the Mario Brothers kind of thing. Which I don't know why.
Okay.
The pixels, RJ.
Did you inherit Drew's Walmart connection?
I have. Can you hear me?
Yeah, you're real bad right now, man. I'll give you a second to lock that down.
Yeah.
And I'm sorry, and we can go back to
Yeah.
your point once you get ungarbled on us. But hey, I kind of wanted to move on to sort of maybe the last category or the last big. I mean, obviously there's lots of factors into what can cause a recession, but it's just you and me, Hailey.
Yeah.
Yeah, that's interesting. But so I was.
But why is it RJ's background?
It's not for me. That's weird. Yeah, I just have yours. I don't have anybody else up. You're the only other person on the call right now.
Well, we'll see if RJ hops back on.
Yeah, he'll try to. Hopefully, Drew will try to. But what I was going to ask you is, it seems like sort of a final category of things, to my understanding, that can cause recession. Hey, we got RJ back. Hey, cool. So, that it's the category of people who are already preparing for a recession / want a recession, that actually can contribute to there being a recession. Can you speak to that at all, or should I expound on what I'm referencing?
I mean, I could see, the only, just to put on the tinfoil hat for a second, one of the things that Trump has started pushing in order to boost up the economy from a extended downturn, is lowering capital gains tax rates, which I thought about as you were saying that, of like, who would want a recession? Well, the people who, but I mean, I don't know. I don't know if I could go that far. But so then, yes, I think you should expound a little more then, Dave.
Gotcha. So I guess one of the things, I don't want to go too deep into it, but like, say some investors, and we talked about this a little bit before the show, like some investors, if recessions are somewhat cyclical, if for good reasons or bad, if they end up sort of coming out in a more or less, predictable pattern, right? Like we see these indicators, boom, we're in recession, housing prices fall, interest rates will fall to try and, prime the pump kind of thing. And then that's the time for them to go and like snatch up all the real estate and all the people. Like, people made a killing off of the Great Recession in real estate. People who bought up all these houses, when everyone was losing them due to, foreclosure. That was a great time if you had, fuck you money basically, and could go around buying real estate. That was really good for them. To my understanding, some people wait for that, not in necessarily such a super predatory kind of way, but it is better to buy when prices are low, right? And so that's what some people do. So some people are withholding from spending money right now, so that they can do that after the recession hits and things sort of hit the bottom, right? Is that are you following?
Yeah. Buy low, sell high.
Yeah, literally that. But the fact that they're withholding now, because they're seeing these indicators, is actually just it's just giving it inertia essentially that's going to bring us there. And then
I hear what you're saying, but I just think that there's a lot of variables to that. Everyone wants to have a good business environment where businesses are doing well. When you have whenever you have investors starting to have less confidence and the market becoming more volatile, yeah, they're going to hoard their assets. They're going to hoard their money just because it's no longer attractive to go there.
Gotcha.
Yeah, so I get what you're saying, but I also think that like all of this, that it's hard to pin that down on one specific thing, and I wouldn't want to tie it. I mean, it's all selfishness and greed, but I wouldn't want to tie it into people saying like, oh, recessions are always happening and we're due for one, and yeah, the global elite is making one so that way they can buy up more shares and continue being the global elite or something. I don't know.
I don't think I apply that level of sort of sinisterness to it necessarily. They just, there's indicators. It's been a while. We're probably going to have one. Things look like they're slowing down. I mean, Trump bumblefucking around in our economy for so long is eventually going to have consequences that I think sane people realize that. And if I had a lot of money that I was looking, to make investments, whether it's real estate or some other project, whatever it is, that like I might hold up, until I get the most bang for my buck. If it's starting to, if you start to smell the smoke on the breeze, let's wait, and then I'll come in and when everything else is in ashes and everything's nice and cheap, and all of our government resources and everyone's trying to focus on getting us out of this slump again, and that'll be the easiest for me, and I can maximize my profits. Like that's I think all it is, not some I'm going to
all right,
what I'm saying? Like some overlord's plan or something like that. But like no, I mean they're just kind of they're just kind of reading the situation and waiting accordingly, which contributes to it. So
yes,
that's all
I
I'm
think
saying.
One of the problems with that is there's a big difference between a temporary downturn in the economy and a major downturn in the economy like the Great Recession. You can make a lot of money on a Great Recession. A lot of people did. They shorted the market.
Yeah.
They shorted banks that held mortgages because
subprime.
Crap loads of bad debt because of
right.
Go ahead.
And people saw that, right? And they bet heavily on it, and they made billions of dollars. But a recession, recessions happen all the time. Recessions happen for things that are completely out of our control. Recessions happen because things in other countries are not working out the way that we would like them to, and we literally cannot do anything about them. In the current environment, I think that the fact that Trump is just goading a recession with his policy on China and his inability to understand that trade wars are not easy to win.
But he said they were. I don't know.
He did. Yeah, he did. But the point is, he doesn't know how to get out of the fuckery that he's in, and it's not going to be pretty because he's surrounded himself with yes men. Like,
Yeah.
normally we have presidencies where we have the greatest minds in the world surrounding the president, informing the president of what is most likely to happen. Here is all of the information that we have. This president doesn't even read. So
And also,
we're
I think, oh, sorry.
go ahead. No, please.
Well, I mean, we have the, we're seeing these warning signs and everything, and it's not that China isn't also dealing with certain problems as a result of the trade war, but their game plan is pretty simple. You know, to how I'm reading the news is it seems like China believes they have their economy under control enough, more so than Trump has the U.S. is, and so he's more vulnerable to a slowdown. Because he's up for re-election next year. I mean, uh, I can't. It's just Ching. Xi? How do you pronounce Xi? So the president.
Xi,
Yeah, there we go. Xing.
Xi.
Xi.
Xi. I mean, didn't he amend their governing rules to mean he could be president for life? He doesn't have a re-election to worry about.
Yeah, he's not really politically vulnerable.
Trump is more vulnerable to a slowdown, and I think China thinks they can afford to wait him out.
I heard that too. I mean, they're not as inhibited as we are, as the U.S. are, generally speaking. Just because the way their government is organized, and then plus they because of that, especially this new factor where he's not politically vulnerable, potentially for the rest of his life, that he gets to play a much longer game, right? Than Trump, who's got was it something like 18 months or something like that before the election? I don't know exactly off the top of my head. Like, he has that much time to get himself out of this situation, and China can just squeeze him out, basically. Like,
but
they can wait,
Totally, but look at the products. Like, Chinese products are durable for the most part.
Yeah.
Most of the things that people are importing from China are durable goods. They're the sorts of things that can sit in a warehouse for 5 years, and you can tell me that they're worth $1 or they're worth a penny. But at the end of the day, I can just hold them in that warehouse until they're worth what I want them to be. American products that we're exporting to China, especially like soybeans, just die.
It's all perishable stuff.
They're perishable
I mean, that's
goods.
why Trump was tweeting very excitedly about getting a deal with, I think, Japan to buy corn, because, the states that are going to feel the most from these early warning signs are the crucial states that he won to get his presidency, either the manufacturing land or, the breadbasket area of America. And that's what's getting hit first with the trade war. Yeah. So that's why he's like, oh, yeah, I've got a deal to sell corn, because, I think China's trying to wait him out.
Yeah. So I guess point on this, and it ties in because, so for the people who, are the, the hold your nose and vote for Trump kind of people in 2016 and maybe again in 2020, because they don't like the way he acts. And, you hear this from some people. They don't, but they like, that he's putting forward, certain social policies, or that he is, the job market is, the unemployment's low and the economy's good kind of thing. But they've always stuck with that. Whatever we think of that personally as an argument, it's been his best argument, Trump's best argument this whole time and for re-election, that the economy is going strong under Trump. Well, he loses that. He loses really everyone but, the evangelicals and the white nationalists, some of which are both categories. But, apart from those, the ardent, identity politics people, like, he's going to lose everybody else. So is it to us, basically, is it something that we want to say, yeah, we're ready, we want to see a recession next year, that this is going to be good for us. We would want that ourselves, because there's, I guess, some finger pointing as to whether or not that's like un-American or something. What do you think, Hailey?
I mean, I don't think it's I don't think it's a good plan to like cut off your nose to spite your face kind of thing. I think that's actually taken a cue from Trump's trade war playbook of damage your own self to try to damage someone else. So no, I don't hope for that. I would hope that the person he runs against could beat him without there being a recession. If there is a recession, I hope that we're not stupid enough to keep him in office. That's a bigger concern. I don't know, like he's there. We're here. I don't think like.
Yeah.
Like, yeah,
Okay,
okay. Let's hope for a recession so Trump loses. It's like, we could just be in a much shittier situation though. So.
Sure. Yeah. I mean, my idea is that anything that gets Trump out of office is probably a good thing.
Mm-hmm.
I don't know that a recession is a good thing, but I'm also not sure where the line is between the economy is great, okay, actually in a recession, where Trump gets out of office. I think that he is doubling down on his base showing up. I think that we're seeing that in his recent decrees on immigration, which may not hold up in court. I think that we're seeing that in the weird testy way that he said maybe we'll do a payroll tax decrease. No, that never works. That could come into play late in 2020. Personally, I think that he's looking for ways to squeak out another victory, which is what he did in 2016. And there's not a good defense against that when someone has, the executive branch under them.
And I also think that you're dealing with this inherent problem that you only know that you're in a recession after the fact. So, after the fact, we might know in November of 2020, we were in the middle of a recession, but we're not going to actually know that until a few months later, whenever we're looking at the data and understanding like what actually our growth was, what the numbers are. So
Fox and Friends can still say that it happened after the election, right? Is that the long and short?
But our knowledge would have occurred after the election. So who cares? Because at the time of the election, none of us can honestly report that we're in a recession because we don't have. I mean, Fox and Friends can say that we're definitely not, but that's not going to change anything. It's not going to change the fact that you never know this information until after the fact inherently. And so to hope for something to exist is to hope for it to exist soon enough for it to actually impact the election. And so I think we don't like these are early warning factors. So
and to build on that, I think it would be great. Like, I think it would actually be great for the economy to grow at about 2 to 2.5% forever. I don't see why that's a bad thing. I don't see why
growth. Yeah, a lot of people screamed about Obama's last year's that our economy was stagnant. We were this and that. I heard that so many times. I could not possibly tell you. But stable growth doesn't boom and bust, right? It just remains stable. Right. It's sustainable, is what it is.
Right. It's not volatile either. It's attractive. Stable growth is attractive.
It's attractive, and it's the sort of thing that you can actually do. Like 7% growth is not attainable over a long period of time.
Right, but it can be good for certain people if you know how to manipulate, your
if you have the right money at the right time
to take advantage of it, right? And take advantage of those booms and busts. But so unless you're super savvy and rich already, then no, it's not a good thing. So
no, it's not a good thing.
So concurrent.
But why don't we just grow 2 to 2.5% forever? because nobody actually wants that. I think that's the easy answer. And when I say nobody, I don't mean nobody. I mean nobody who profited off of the Trump tax cuts.
Right.
Those people don't want that.
So I think maybe we're in consensus on this, that like I don't think any of us want a recession. I think that's I just don't think that
Yeah, I think
we might.
I was gonna say, yeah, I don't want it either, but it looks like it's gonna happen, so might as well use it, kind of thing. Like, would it be better ultimately for the country to not have a recession? Of course. Would I generally be for that? Sure. Anything I'm going to be able to do to change that? No. So if that's the hand being dealt, might as well play it, kind of thing. That's sort of my take on it.
The one thing that if this present slowdown continues on, to the point, I hope that we're at a point in time to where we couldn't hold Trump accountable. I hope we don't reelect him.
Sure.
Right.
Because that would be horrible.
Right. And can we just say that there's nothing about Trump's economy that wasn't a continuation of Obama's economy?
No, absolutely.
But I think so many people deny that. And it's amazing that Obama grew the economy for most of the years he was president, when he was after the Great Recession, obviously, because that was a total fuck show. But that wasn't his fault either. He inherited that. But
they still compare that. They compare Trump's first year to Obama's.
I'm
preaching to the choir here. There's no point in going into it.
Of course, but it's ridiculous.
Yeah.
It is not an accurate comparison. And the fact that the zero hedge of the world, the people who didn't even understand that Fight Club was not a movie about a really cool guy who had a bunch of muscles.
I don't know what zero hedge is, so
it's
just some
awful.
right-wing bullshit. Yeah,
just don't look it up.
Okay.
But those people used to excoriate Obama for never reaching a 3% GDP growth over the course of a calendar year. And that measurement is meaningless. It has no meaning. Obama actually did achieve a 3% GDP growth over the course of a year, if you just were to pick 12 months out of the year. But Trump is never going to...
But do they mean January to December? Because that's not even a fiscal year. That's not even a fiscal year.
So dumb. It's so dumb.
Yeah, that's literal cherry picking. That's what that's called.
Yeah, they cherry pick it, and they say, well, Obama is the first president ever not to have a single year of GDP growth of 3 or more % in his presidency. And Trump is not even going to touch it. Obviously he had 2.9% last year, but he inherited this. He inherited a reasonable amount of growth over a long period of time, and he's submarined it. It's going away. Right now, what we're seeing is 2% growth. I don't know what we're going to see in quarter 3, but it's probably going to be below 2%. Quarter 4 doesn't look great either. The reason being because Trump has just been supposedly pushing off further tariffs on China. Even if we were to reach a reasonable growth rate in quarter 4, quarter 1 of 2020 is going to be a bloodbath.
Yeah. And whenever we say that, whenever you hear things like the economy is cyclical or things like that, it's a rolling wheel, and it's easier to push it to go faster whenever it's already running smoothly and at a good pace. It's easier to increase it and everything. But whenever you start hitting these bumps and you start seeing these slowdowns, it is harder to speed it back up again, and it most likely ends in a bigger slowdown, because that's just the natural result of the progression of how that is going. So yes, Trump inherited Obama's economy. Obama inherited Bush, and here we are.
Yeah.
I don't know how much more I'd add to that.
Right. I just want to add to that Obama decreased the deficit. Obama saved the economy for the most part. I mean, actually, some of Bush's people helped save the economy, and I agree with that. But Trump is taking a stable economy and running it into the ground.
It's almost like he doesn't know what he's doing.
Oh wow! Yeah, wow, that's so weird.
Isn't that funny?
It's almost like he might
I
be
can't
illiterate.
tell the difference between the 40 chess and a bumble fucking competent. I don't know. Like,
Oh no,
sorry,
seriously.
I
Like
had to say it.
if you wrote like a 13-letter word on a piece of paper and asked him to pronounce it,
Hamburger.
I think
Okay,
it would fail.
okay,
I think it would fail.
But I think that's a good place to stop, probably, because I'll just keep drinking and we'll just start bashing Trump and we'll be horrible leftists or whatever they're calling us these days. But thank you guys. This went on a little bit longer than I thought. I think it was always fun. So hopefully people will be engaged by that. We did cover some good things like basic economics that we keep talking about wanting to do. I'm glad we got to cover some of it for real, for once in a way that's digestible and it's not like, reading a book on economics or something like that. So thank you guys for coming out. Thank you to Drew, who was here earlier, our meme lord. I'm going to do the little thumbnail with the picture he made because it's funny. Shout out to Mr. Ross Janes at janesmedia.com. He is our digital wizard, makes all the bells and whistles work, so appreciate him. You can find us at fermentingopinions.com. We have a Facebook page and group by the same name, Fermenting Opinions. Also the podcast.
And the swag.
And the swag. Yeah, we have a store, which I need to link to the website officially. So you can buy cool FO swag, courtesy of Mr. Terrell Wilson. But all that said, I'm David Poseidon. This has been Fermenting Opinions, and we will catch you next time.